What's up, guys? It's day 11 of BJW Bootcamp, and I'm going to be continuing liquidity. And today's video, I'm going to be showing you how to spot liquidity in any pair, be it XAU USD, GBP USD, whatnot, BTC, whatever pair. You can go ahead on that chart and as well spot liquidity. However, in our previous video on liquidity, or previous class, I taught you guys about the three types of liquidity, which is the inducement liquidity, the structural liquidity, and transactional liquidity. I'm not going to be going into details in it because I'm going to be using them into this video to show you how to spot out the right liquidity, where money are being flowing in, where you're going to be getting the actual continuation for you to either buy or sell. So this video is going to be an important piece for you if you want to know how to trade and also how to do your technical analysis the right way on any pair. However, if you're still following up the bootcamp, I love you so much. You're here to learn. You're here to also change your life. You want to go ahead and so share this video. Most importantly, like this video, subscribe to the channel, turn on the bell notification so you're going to be notified whenever I upload amazing videos like this on the channel, right? So basically right now on this particular chart, this is our trading view, and if you've not watched the day one or part one of the liquidity, you can go ahead and watch it. It's as well in the playlist of BJW Bootcamp. Without further ado, this is XAUSD, so I'm going to be using the daily time frame first to show you liquidity, also show you in the 4 hours time frame, show you in the 1 hour time frame, and then show you in the 30 minutes. But before I show you liquidity right here now, in our previous lecture, I told you guys whenever we have stuff like this, in a break or structure, this tend to be for every break or structure, this tend to be a reversal, which is same as what your transactional liquidity, or a correction that will form another break or structure, just like that. So that's what a transactional liquidity is, and I tend to teach you guys that in our previous video that a structural liquidity tend to be the continuation which we tend to look for, and the continuation is always the last high before the main high in a bearish trend, and the last low before the main low in a bullish trend, and which is something like this. Like as you can see, we have this trend moving bullish, so right here becomes your last low before, right here, I'm sorry guys, so right here becomes your last low before the main low, and right here become your last low which you tend to protect. And what you tend price to do is to come into the zone, take out the zone, and then you see your continuation. However, there are also other things which you're going to put in place which you need to know, which in this video I'm going to show you, and that is where I talk about market structure and then knowing where exactly you're going to mark out as your structural liquidity. And I'm going to be showing you how to spot these exact things in this particular pair. However, that being said, let's dive in. So now you understand the basic on what liquidity is. Now let's go into a chart. I'm using XAUUSD to show you how to spot liquidity easily without no stress. However, I'm going to start from the 1 day, go out to the 4 hours, 1 hour, 30 minutes, 15 minutes, 10 minutes, and lastly 5 minutes. However, you want to make sure you grab this and then pay close attention. I'm going to show you what a transactional liquidity is, where a structural liquidity is, and also what an inducement liquidity is. However, starting with the day one right now, if you look basically right here, now you want to see that if you see where this chart came from, you can clearly see that we have something like this in the market structure. We saw this break of structure, that as well, that take out this one right here. We saw another break of structure that take out this one right here. We saw another one just like that. It has been going. So however, now I'm going to tell you that right here you're seeing basically is liquidity. Right here you're seeing is liquidity. Also right here you're seeing is liquidity, and right here you're seeing is liquidity. Also right here you're seeing is liquidity. Right here you're seeing they are all liquidity. Now between this particular region, where is a structural liquidity, where is a transactional liquidity, and where is an inducement liquidity. However, there is no inducement liquidity right here. I'm going to show you an inducement liquidity in a 1-day time frame and basically show you what to do whenever you see an inducement liquidity. So looking right here, they are basically a structural liquidity and they are basically a transactional liquidity. However, if you remember vividly, which when I talked about market structure or the algo market structure, I told you guys that for you to say this market structure is an algo, you must first of all see a sweep like this, then a first break of structure, then another low, that break of structure. Then once you see this, we tend to say that this right here basically tend to be our what? This right here, tend to be your sweep, which is then you will this tend to be your what? Your low, and then this also right here be your breakout structure, second breakout structure. And I tend to say the last low right here become your A, then this right here becomes your what? Your B, then this one right here become your C. Now, when I now say this, I said whenever your B is being taken out, you see the actual continuation. However, in this particular region, now in terms of liquidity, you want to say that this, whenever your B tend to take out, becomes your structural liquidity, and then this your structural liquidity is where you tend to look for that particular buy, if that makes sense. So I'm going to delete this and then show you in a clear chart, and then you tend to understand this whole thing in a visual chart, right? Not by giving you explanations and all right there. So right here on the chart, right now, this is XAUSD, and then right here on XAUSD, you can clearly see that there is what? You can clearly see that there is a sweep right here, a break of structure to this zone, right? Then we had another low, and then we have what? Another break of structure that happened here, and then you saw what? Another break of structure right here. Let me delete everything. Let me use a clear patch so you understand this whole thing, right? So that you understand. Now, this is a sweep right here that take out this high, right? This high, this break of structure is what causes what? This sweep, right? And whenever you see a sweep, you tend to look for what? The next break of structure. And what happened? And we saw this. We saw another what? Another break of structure right here. Right. We saw another break of structure right here. However, it's going to be very little because this is a higher time frame. We saw another low at this point, and we saw another break of structure right here. We saw another low again, and we saw another break of structure, and we saw another low, came down to this zone, and then this take out to this break of structure. Now, if you watch vividly, now you will clearly see that this clearly gives us what our transactional liquidity is. And what is a transactional liquidity? Transactional liquidity tends to give us what? A reversal. It tends to give us what? A correction. Now, a correction is whenever a high is being taken out, there are going to be what? A correction. There are going to be what? A reversal. That reversal is known as transaction. And where is the reversal? So if you watch vividly, when this high was taken out right here, as you can see, when this high was taken out, I'm using a 1-day time frame. Don't worry, just keep watching and paying close attention. I'm going to go over to 4 hours, 1 hour, and then 15 minutes and 5 minutes. Then you get the whole understanding. Now, whenever this high is being taken out, you guys can see from the exact candle right here, not the week. And I told you guys, I talked about candlestick, so I believe you must have understand what that is. So when this high was taken out, this particular high caused what? This other sweep that caused what? The break of structure. And when you see this break of structure, you can see another low right here. This one tend to happen. You see this one, that not the week, where the candle tend to close. You saw that break of structure. So this now has given us what? A sweep of this, right? A sweep of this. And then what happened? We saw that low that formed this low. All right. So you can see another one right here that formed this particular high right here. Right. So this also formed this high. You can see, right? That is the high. You can also see this one. So now you've seen that this is a break of structure, and this break of structure formed this particular low you're seeing right here, and then that broke the structure. So this break of structure, so all you can clearly see here is a what? is a transactional liquidity. The reversal you're barely seeing in this zone, this reversal you're seeing right here, are all what? Transactional liquidity. This reversal right here is a transactional liquidity. This reversal right here is a transactional liquidity. This reversal right here is a transactional liquidity. And also this reversal right here is a transactional liquidity. So now you've understand what a transactional liquidity is. Now let's go over and then look for what structural liquidity is, right? That makes sense. So I'm going to go ahead and delete all this. Structural liquidity, we tend to now go back to reframe on our algo market structure, which is to say, whenever we see price does something like this, whenever there is a sweep, so in algo market structure, we say there must be what? A sweep of the previous high, a break of structure, another low, another break of structure, and we call it what? The ABC model. Now you've seen the ABC model, which is to say this right here tend to be your high, you'll be protected, the low to be protected, this right here be what? Your low to be protected, and also these tend to be your what? Your second low, right? And then whenever price or whenever the B, and also this becomes your what? Your what? Your sweep, right? And whenever price tend to take out your B, this zone, tend to come to this zone, take out this, sorry. Whenever price do this, sorry for that. Whenever price take out this, you see the exact continuation. So this take out you're seeing, this B that price tend to take out, it becomes your what? Your structural liquidity. And this is where you get your what? Your clear buy or your clear, sell, either in a sell position. This can also apply in a sell position. You can also see it in a buy position. Now let's see in a sell position. In a sell position, if you see something like this, a sweep, then break of structure, right? So this becomes your what? Your setup, right? Now what you tend to say that because there is a sweep and this is now algo market structure, this becomes your higher high, you tend to protect, and then this become your higher low, you also tend to also protect. And what you tend to do is whenever price tend to also take out this particular low, right? Take out this low right here, then you'll see the exact continuation. Is that easy? So if you as well follow this particular model, you will as well beat liquidity beat structural liquidity, and then see nice setup to as well take good trade and make money off liquidity, right? That makes sense. So I'm going to go ahead and show you guys in the chat how liquidity tend to play out. All right, so welcome back right now. So you can see basically that this is it, and then I've marked out the break of structure that caused. So this is in 1 day. It won't be that clearer when I would tend to go to 4 hours. Now we've already saw that we have a sweep. Now following the algo market structure rules, we must see a sweep, then a break of structure. So if I go ahead and look at this, now you can clearly see that this is a sweep, right? From this zone right here to this zone becomes your what? A sweep, right? Let me use a bigger row. This right here becomes your what? Your sweep, right? And then this right here becomes your what? Your lower low you're expecting to protect. Does that make sense? So I'm going to come right here. This becomes your what? Your lower low you're expecting to protect, right? So I'm going to go ahead and delete all this stuff I've drew so you can clearly see what I'm talking about. Now you can see how this tends to play out. Now you want to know that you mark out from where the candlestick is, right? So but I'm just putting there in case to, right? So just put it right here, right? So you can also mark anywhere. So now this is the accurate way. Now you can see that we've gotten a sweep, and then we've seen a what? A break of structure. Now after this sweep right here, we had a break of structure, and then what happened in the break of structure? There was another reversal which you are seeing right here, and then this reversal we can also go ahead and mark it out, right? Can go ahead and also mark it out where it's also happened. Boom, right? Now you've marked out where the break of structure is. Now what is the next thing you're expecting? Now we see that we've gotten what? Our A right here. We've gotten our A, and then this become our B, right? Makes sense. Cool. Now you've gotten your A and your B, this your first break of structure, and then this your second break of structure at this zone. Now the next you want to look at for is whenever price tend to take out your first break of structure, your B, which is this, and then whenever price take out this your B, that becomes your clear structural liquidity. And then if you watch right here, there are multiple B's basically. You see, after price took out this high, right here, let me delete this. After price took out this high, there was another high being taken out, and also they form another hole, but this high was not taken out clearly, right? But then after price took out this high, you saw what? It came down to the last low before you saw this pull that consolidate around this zone, and then before going up. Now, what happened? Immediately price now tap into this zone. What happened? You saw the push. Now, what is happening right here? You are seeing your first break of structure. You're seeing the second break of structure, which is your B, and then you saw another low that formed another break of structure, and you saw another low that took out this B. So after you seen this, your A, B, and C. So this is your C. Let me mark this out as your C. So you're seeing your A, B, and C. Now, what are you expecting? Now, remember the rule. Now, whenever price as well take out your B, you do what? You buy from. Now, what happened? Now, we've seen our setup right here. This is our A, another low that formed this break of structure B, another low that formed this structure C, right? And then what happened? Immediately price tap into your B, which is your structure. You can see this right here. So what happened? Price as well tap into this B, and then you saw that it consolidate, and then you saw that pull. Now this tend to be your structural liquidity, because price has come back into your B section, and then you saw that clear pull. And this is the strategy which is same as this right here. And this is what play out here is exactly as this. Let me show you guys. What play out here exactly as this. We saw this, price sweep this, and then form this, and then came back into this zone. And what happened? It play around, and then you saw that push. So this was what price actually did right here in this particular zone. Easy peasy. If this makes sense to you, just go ahead and comment I understand. And if you want, basically I took this setup on XAUSD and it's then play out. Now this is in a 1 day. Now let's then niche down to 4 hours, so you tend to understand what I'm talking about also clearly. Now I'm going to delete all this, and then let me go to 4 hours. You're still talking about structural liquidity, so you tend to understand this real well, and then tend to apply it in your trading, right? So that makes sense. And let's look at this. Now we can clearly see on that sweep that came down to this zone, take out this, as you can see, came down to this zone, take out this, came down to this zone, and then boom, right? And now this tend to be your a bullish trend, right? I'm actually showing you guys in a bullish trend. I just hope you guys understand. So if you don't understand, you rewatch this video, you will definitely understand. So we saw a sweep, and now remember our go market structure, we must see a sweep of structure, and then adding with structural liquidity tend to be the last high, the last low before the main low. Now looking this vividly, you want to see that this low become the last low before this low, and now it must be in a V shape, right? Clearly it must be in a V shape. This is a last low, and then this is what becomes the main low. Boom. Making sense, right? So I'm going to delete this. So now you've seen this, the last low before the main low. Now you can clearly see that this is an A. Easy. You can clearly see that this is your A. I'm using alphabetical so you can remember it fast, and this is your B. And then once it tap into the B, we can say, because after it tap into this, there was a structure that happened right here. It came to this zone. You can see right here, this is now our C. Now what happened? Now that is where structural liquidity comes in. Now if you watch, basically you can see that before this came into this zone, we can clearly see multiple B's, right? Now you can see that there was a B right here. That was a structure that take out this. Another one came, take out this, and then before it start falling. Now, if you watch basically when price tap into this zone, you will say that price want to clearly, continue, but price did not continue. Even when price tap into this other zone, you guys should watch closely. Even when price tap into this other zone, you will feel that price want to continue, but price did not continue. What did it do? It take the exact continuation at this low, at the last low before the main low. And where is the last low before the main low? The last low before the main low tend to be this particular low. So this is where you can get your clearer continuation, and then you saw what happened. It rally down and then go up. Easy peasy. That is structural liquidity for you, right? So you must clearly see the last low before the main low. So if you take off a trade, or let's say you saw a setup like me, I can clearly see a setup right here. Let me delete all this so you can understand. Now I can clearly see a setup right here. Now if you watch right here, let me show this. Now you can clearly see that this was a sweep, but then this is not a clear sweep because it was only a week that happened right here. This did not close above this. So I don't know if you guys understand. So this was just a week, but it did not close above this. So the week it as well closed right here. So which is to say this is invalid. So if you see this kind of trade and then you can say, okay, this is your sweep, and then, or this is your sweep. So what are you expecting? You're expecting this to become your low, and then you say this is your B, or this is your B. So if price as well come into this zone, let's say you say price tap into this zone, it will buy, it won't buy. What we do, it will as well take out all this right here. All this becomes your liquidity that price will take out, and then you lose out on your trade. And where is the exact liquidity? The exact liquidity tend to be the last low, which is this. You're seeing right here before this main low, and then this is where you can get your exact entry. And if you should put a buy from this zone, you could take this trade toward to Valhalla. That makes sense. Is that easy, guys? So now you've understand this in a 4 hours time frame. If you don't still understand, still keep watching. Let's go to the 1 hour time frame. I'm still talking about structural liquidity. I'm not going to inducement. Inducement is very simple, but then it's something you need to like understand. It's something that if you don't understand, you might be making mistake thinking that price want to continue, and then you lose out on your money. All right, let's go to 1 hour time frame. Right now, I'm making this I'm explaining this very simple so that you can really understand this. You can really know where liquidity is. You can really spot out liquidity, right? So it's a very simple rule. You already know what transactional liquidity is whenever you see a correction. Now, structural liquidity is one of the major ones you need to understand. Now, we use structural liquidity with the algo market structure. Whenever you see your sweep, then you look for what? For a first and second break of structure, right? Which is look for break of BOS1, another low, you look for BOS2, and whenever the price tend to take out the BOS2, then you buy from. Now in liquidity, we tend to say that the structural liquidity tend to be what? The last low before the main low in a bullish trend. So I'll be showing you guys in a bullish trend, not yet in a bearish trend. In a bearish trend, it becomes the opposite, the last high before the main high, right? In a bearish trend. So now I've been showing you in 1 day, I've shown you in 4 hours. So let's go ahead and show you guys in 1 hour. And now we're not going to be talking about buyers, best buyers to trade up from. That is what I'm showing you, and this is where you can tend to look for what your exact liquidity to get to what your PY. And we're going to be talking about PY. I'm going to be showing you how to as well spot out where to trade from, because there are other confluence. If you tend to use 4 hours, you tend to use 1 day to enter your setup, then you're going to be getting bigger what's it called? You're going to be getting bigger stop loss, let's say high risks, and probably some of the times you can get high risks to little reward. So that we use lower time frame to get what low risks and high reward. So let's just load out 1 hour so that I'm going to show you liquidity in 1 hour using this particular pair. So you can do this in whatever pair, be it BTC, be it S&P 500, be it USD JPY, GBP USD, whatever pair of your choice, and it's going to work perfectly. And trust me, this strategy is killer. If you work with this strategy, you follow liquidity this way, you won't gonna be miss out. And guys, don't forget that Bluefin is the one sponsoring this BJW bootcamp. And if you don't know how to trade with Bluefin, you've not started trading with Bluefin, you want to go ahead and start trading with the Bluefin exchange, and all you want to do to start trading with them is to just go ahead, use the first link in the description section, and also start trading with Bluefin. However, with that said, the link gonna be in the description section, and if you use them and start trading, you're gonna be getting the first welcome bonus deposit, which is to say, if you deposit any money after setting up and verifying an account, you get an incentive and a free trial bonus, which you can trade for free, and also only what you can withdraw is just the profit you've made with the free trial bonus and a lot of other bonuses and incentives that Bluefin have. I've made a video on Bluefin and also how to trade with them. You can go ahead and check on this particular channel. Without further ado, this is 1 hour time frame. Now 1 hour time frame is also a good time frame you can use. So let's check 1 hour time frame and let me spot out liquidity in a 1 hour time frame. Now looking at this chart, now you can see basically that this is a 1 hour time frame. And what am I clearly seeing? Now I'm clearly seeing the same thing I saw in a 4 hours time frame. Now I want to know that sometimes 4 hours and 1 hour tend to align. 1 hour and 30 minutes tend to align. Sometimes 30 minutes and 15 minutes tend to align, and 15 minutes and 5 minutes have this alignment. So if most of the times your trade does not align between both time frame, then you want to know that your trade analysis is becoming wrong. Now, where is structural liquidity on a 1 hour time frame? Now we can clearly see a higher high that take out this one, right? You can see this. Now I don't want to look out for any sweep right now, I just want to show you clear. You can see this took out this, that formed this, that took out this, that took out this right here, and that one that came also took out this right here, and then we saw this. Now let me stop here right now. Now I want to know that I want to look for 2 breakup structures. Now what are the 2 breakup structures we can see right now? We can see the first breakup structure, which is this. Sorry, and see the first breakup structure, which is this. You can see first breakup structure, which is this, and second breakup structure, which is this. And now in liquidity, we tend to say that liquidity becomes what? A liquidity. Structural liquidity becomes structural liquidity whenever there is when price tends to take out the last high before the main high, or the last low before the main low in a bullish trend. And what really happened? We saw our first breakup structure, we came down, we saw another breakup structure right here. As you can see, this was the breakup structure I'm talking about. The first breakup structure to this zone. We saw another breakup structure to this zone. Right, it might not be that clear, but just try to understand what I'm saying. Right now, this is it. Now we've seen the first break, and we also saw another low, which is this. Now, where are you going to trade up, and where does as well the trade trigger up? Now, when the trade came into this zone, if you look clearly, when the trade came to this zone, there was a reaction. When the trade came into the zone, there was a reaction at the zone. It took a reaction, but that reaction was not strong enough. What happened? It sold off to the last height, which is this, and then you saw the overall reaction to the top side, right? And that is where your structural liquidity tends to be. It be the last high or last low before the main low, right? Easy. Now, if I also go this way, let's see if we're gonna see something. Now, if I go this way in a sell position, now I want to see this. Now let me show you this in a sell position, so you understand it in a sell position. Now, if you watch right here, we have something like this that went to take out this high, and boom, right? And what happened? So immediately it took out this high. We saw what? You saw another pull that take out another high, right? That take out this high. Now we can clearly say that this is your what? Your last high. This right here is your highest high. And then where is the last high before the main high? Where is the last high before the main high? This is not the last high before the main high. This is the last high before the main high. This, right? Because this was just a candle, just one candle that happened right here. So this was a series of candle that came together. Let me delete this so you can get the whole story. And then right here it becomes what? A sweep, right? And we want to be talking about more of this sweep when we're going to be talking about POI, guys. So for now, just understand where structural liquidity lies, right? That makes sense. So here's the sweep. All right, so now you've seen this. Now you can see that this is your last high and this is the next high. And what did the price did? Now immediately you've gotten your first break of structure, right? You've gotten your first break of structure here, second break of structure. What next? Price do what? Came down, tap into this. Now if you put your stop loss right here at this week, so if you put your entry at this week, you won't be triggered, right? However, if you put your entry at this zone, at where the opening starts, you will be triggered. That is why when I taught you guys about candlestick, I told you guys your entry should mostly, especially for you not to be losing out or missing entering, you don't put your entering at the wick. Your entering should be at the open or close of the candle. Even if the wick should just be like where they are going to be maybe a drawdown or a bit, but then the open or close of the candle should be what you're entering. And what happened? You got an exact reaction at the open or close of this particular candle, which you're seeing right here. You can see the open right here. Boom. Right, so you can enter from there, and then what happened? You saw another structure that took out this particular high. That way you've made what 1:2, and that is where you saw what an exact continuation or buy. And now once you saw that continuation, it came down to this zone to continue the buy. Well, you saw that exact continuation sell that continued the buy in this zone. Is that easy? So this is how it is. Now if I go to 15 minutes or 30 minutes to see if this thing I did is correct, now I'm going to come right here. Let me delete all this. Now let's see what we just did was correct. Now if you watch, basically it aligns, right? It aligns. And where is it? You saw what? You saw the sweep. It took it out. You saw what? Another low. It took it out, right? And what happened? Immediately price tap into this zone, you saw that sell. Boom, to the downside. It took out this liquidity. Now, if you as well someone that as well and had an entry right here, price would have taken you out and then you hit stop loss. You took it out to this downside, right? And then continue the buy. Now, however, this was our higher high. Right here was our higher high. And this was your what? Your last high right here, higher. And this was your what? Your lower high, not your higher high, right? Now, this also was your what? Lower high. Sorry, this was your higher high and this was your lower high. Now, you want to see that clearly when price when price tap into this your higher high, what happened? You saw the pullback. And now structural liquidity tells us that whenever we see a bullish trend, we look out for what? We expect a continuation from what? The lower high before the main high. That is where we see a clear continuation. And where is the clear continuation right here? Is this after price has what? Tap into this higher high at this zone right here. At this zone, price tap into it and we saw the continuation. Price did not continue from here. Price did not continue from here. Right, it continue at this zone, as you can see. Price, you can see this right here is also a liquidity, another high. So why did the price not continue from here, right? But however, price had a exact continuation from this zone. Is that easy? That makes sense, guys. Now you've understand that. I'm going to go over to 15 minutes. I believe you guys are really getting this whole thing. This is going to be a very long one, but if you understand this whole thing, you won't find it difficult, right? You won't find it difficult. So I'm going to go to 15 minutes. Let's see. 15 minutes is always very volatile, and most of the time you can get a clear entry from 15 minutes. 15 minutes. Let's see where liquidity is in 15 minutes. All right, now in a 15 minutes time frame right here, now you can clearly see that this is a high, right? You can clearly see that this is a high. So let me say I put this right here, for instance. This is a high, and then what happened? You saw a break of structure right here. There's a break of structure. Then what happened? It went to the top, saw series of candles right here. You can just see it here. Let me just put it here. Saw series of candle right here, and then you saw what on that high what being taken out right here. So now high being taken out right here. Let me delete this. So now high being taken out right here. Right? Cool. And why the high was taken out? What happened? Immediately price tap into this last high before this high. What happened? You saw that continuation down. Easy, right? That is for 15 minutes. If you also come right here, once price did that, if you watch basically, we can see that after this, there was also another position right here. I'm actually showing you guys in a bearish position, in a bearish trend, because now price has changing character, and I'm going to be showing you that right now. All right, so this is another high, and this is also another high right here. Let me mark this out. It's also another high, right? And then now where's the break of structure? Now if you watch, basically we have this coming down right here that took out this high. I took out this high. Let me use this one. That took out this high, this one high. So after this one took out this high, you saw this that play out, that went up and did what? Took out what? This particular high. That took out this particular low, right? As you can see, right? And then we've gotten what? Our ABC model. So I'm going to say this is our A. I'm going to come right here, right? I'm coming right here. This is your A. This is your B. And then right here is your C. Right? Easy. Let me delete this. Makes sense. Makes sense. Now this is a clear setup. And now what the price did? Now immediately price took out the second B. Now it went up and tapped into this zone. And what are you seeing? You're seeing a clear sell. Makes sense. Like it plays. Like you're seeing the clear continuation or whatever you could call it. Right? Now immediately price tapped into this zone. You saw what? A clear continuation. And this continuation will tend to take out days before you can see another, pullback. That makes sense. So this is in a what? If it's 15 minutes time frame. And last week, I think I took this trade last week, and today is Sunday as at the time I'm recording this video. So Monday, we're going to be seeing a continuation, a sell to come back to this zone. Then after I tap into the zone, we'll see another pullback going to the upside. So this is where structural liquidity is, where you see the last high before the main high, the last low before the main low. This is structural for you. Now you understand that. Now if you watch vividly right here, now you want to see that it's very simple to spot. It's very simple to spot. You must make sure you see a clear V shape, right? As you can see right here, that was a clear V shape right here. Let me get my pen. That was a clear V shape. That was a clear V shape. That was a clear V shape. And there's a clear V shape. Easy. So if it's not that clear, leave the whole candle thing, the whole candlestick stuff. Make sure you spot out this clear V shape, as you can see. So once you can clearly spot out this clear V shape very well, you know where to enter a buy or a sell, looking at from where your structural liquidity is will not be difficult for you guys, right? So that being said, this is what a structural liquidity is. So I'm going to go to the 5 minutes. Let me delete everything and then show you what it is in a 5 minutes, and then I'm going to go ahead and show you guys what an inducement is, right? And what causes this, this particular sell. Because basically, while I was showing you guys in a 1 day 4 hours time frame, we're getting what? Loads of what? We're getting loads of buy. But right now, what are you seeing? You are seeing the change of trend, right? Price is not selling. I'm going to show you what causes this sell, and then where did this sell came from, right? And I'm using XAUSD to show you guys all this, right? You can go ahead and check this in a different pair like GBP USD or whatnot. So coming right here on 5 minutes. Now 5 minutes right now. 5 minutes is also you can look for liquidity in 5 minutes, but most of the times you have to be very careful, and you must, before you look for good liquidity in 5 minutes, you must know that in this direction, your bias is already giving you bullish, right? It's already giving you bullish, so you could just look for a quick scalp to enter the market to know where liquidity is, and then spot it out, and then maybe look for that continuation of a structural liquidity and either buy or sell, right? So looking right here right now, I'm not saying anything, but however, if you want to look out for liquidity, first and first, you want to look out for a clear V shape. And where's the clear V shape we're looking from here? Now let's look this in a bullish trend. Now bullish trend is like this. However, this market is going this way. It's a kind of going a bearish trend right there. Now let's look out for it in a bullish trend, right? Now in a bullish trend, we can say this is our high, right? I can say from here, let me get this. This is our high, a sweep, another high to this zone. Then what happened? You see this, though it did not take out this one. What happened? You see this, right? So what are you tend to see? Now I'm trying to tell you that this is now becoming what? Your low to be protected. This is now your low to be protected. Let me get my pencil icon, right? This become your low to be protected, and this become what? Another low, right? Now what are you clearly seeing? Now you're clearly see that price is coming to this zone. So whenever price play out what it plays and tap into this zone, you saw a clear continuation, and which is what price is doing. And which is to say, if you follow the previous time frame which I did, we are clearly seeing a sell what to this downside. And what did I just marked out? I just clearly marked out a sell position coming to this zone. And where's the last high before this high? This is the last low. Sorry, the last low is here before this low. So whenever price tend to take out this, then you buy. So if you as well enter this position in a buy trend, wait for price to come into this zone and buy, then as well take out maybe this particular high, then that tends to be what your buy bullish trend for you. And I've seen where structural liquidity is. So this is not structural liquidity, because if it was basically right here, if you want basically, you want to see that price could come right here, price came right here, and you can see this reaction. But this is not a clear reaction. Definitely it might maybe go a bit and then fall, might maybe go a bit and fall. So you want to know that the liquidity, after you look out towards the bias of the market, you've known where your first break of structure is, your second break of structure is, and then looking out for where price is coming to your structural liquidity. It is basically the last high. And where is the last high? This is the last high before this high you're seeing right here. Sorry, the last low before this low you're seeing right here. And what are you expecting whenever price tend to take this out, take this high out, then continuation? And this tend to be your structural liquidity. Is that easy, guys? So now you understand this from 1 day time frame, 4 hours time frame, 1 hour 30 minutes, 50 minutes, down to 55 minutes time frame, both in a bearish and bullish. I'm going to lastly show you what an inducement is. So guys, that being said, before we go into inducement, because of time and not to make this video very long, because I'm sure this video is already 1 hour. This video is already 1 hour plus, but then I'm going to go ahead and give you guys assignment to go ahead and mark out structural liquidity and transactional liquidity in any pair, be it USD, JPY, be it BTC, be it ETH, whatever pair you feel you're comfortable with. Go ahead and mark out structural liquidity, mark out transactional liquidity, and practice it. And in my day 12, right, if I'm correct, because we're already in the 11 liquidity part 2. In liquidity part 3, I'm going to also be summarizing the structural liquidity and then showing you how to understand inducement. And inducement, as you may know, is known as what? Expansion. And that being said, I'm going to see you guys in day 12. Stay safe and peace out. And if you got any question, don't forget to comment them right here in the comment section. Don't forget to share this video, subscribe to the channel, turn on the bell notification. I love you guys so much and see you guys in the other side. Stay safe. Peace out.